Investors shrugging all of this off, the Mideast tensions after a top Iranian general was, in fact, targeted and killed in a U.S. attack last week. We have Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management, with us this morning. And Doug, it's unbelievable. This morning, an Iran news agency is saying Iran is now assessing 13 retaliation scenarios against the U.S. Dow's up.
Yeah.
18 points. Not a major rally, but we're not selling off. What does that mean to you?
Yeah, it sort of falls into history. If you look back the last 30 years, there's been about 16 of these geopolitical issues. And in all the cases, the average down percentage was about 2%. And some of those are wars. And if you go back even to World War II, the maximum down is about 5%. Yet 3 or 6 months later, we're up between 5 and 8%. So this kind of falls into like a whole lot of nothing, which is in line, I think, with the severity of it.
Is that because you and other investors don't think we're headed to, as some would say, World War III scenario or even war with Iran?
Right. Unlike the internet, which has that hashtag running for World War III, most of this is, at this point, it's really a nothing. We're energy independent. It's not going to affect us in the short run. Apple's not going to sell less AirPods because of this.
Okay.
So those things are going to continue. But if it does escalate, obviously, then you'll have a further retraction at that point.
Glad you brought up Apple and those AirPods, because if you look at the tech sector, it has been so hot. I mean, phenomenal 2019, and the start of 2020 has been even better. Alphabet, Google especially, that stock at an all-time high. Why do you think investors are so bullish on Google right now? Would it have to be, maybe Sundar Pichai, now CEO, maybe there'll be a first-time dividend?
That would be great. I mean, Microsoft has that going for it in the tech sector. I mean, the problem with tech is that it's already such a big percentage of the market, and it was up over 50% last year. But as much as we think that it's infallible, it isn't. There are some things that could cause that to slow down, but it doesn't look like that's happening anytime soon.
It seems big tech is invincible. At least when you look at these share prices, look, 1401, above 1400 is the pre-market quote for Google right now.
So the problem with tech is just that it's already over 20% of the S&P. If you look at the top 5 holdings in the S&P 500, they're all the tech stocks in it. That's 16% of the market. Yeah. So in your 401k, you already have 16% of your money in tech and 5 stocks, and then you might have already owned some of these stocks as well. So even though there's some upside there, I like some better than others. And the thing is, you need to be a little more diversified. Interestingly, the average investor that has 60% stocks and 40% bonds, last year that mix had the best year in a balanced portfolio since 1997. So even, because bonds did really well as stocks, and that's not a common year, because the year before, both those things were down.
And about 15 seconds left, and I just want to quickly touch on Boeing as we assess this 737 fallout. Now the company is looking to raise debt. And as they do that, are you worried, are investors worried that we can get more disclosures about how faulty the 737 MAX program really was?
Yeah, it seems like there's more, where there's smoke, there's fire, there's more to it. But, the stock is way down. I think they can handle this debt, but if you have a long view, nobody wants to have a 100% Airbus fleet, so they need to pull their things together, and the outlook probably long term is pretty good.
Buy it here at 333?
I would be careful. If you own it, I don't sell it. I don't know that you buy it, but I like it better in the low 300s than in the 400s.
So it might be going lower. All right, Doug Flynn, you heard it here. Cheryl, over to you.
Yeah, 333 right now. All right, we've got a lot more coming up.